Let's begin things as we always do, taking a look at some of the market action. We're 90 minutes into the trading day. Stocks, they're mixed. Following Monday's rally fueled by the U.S. and China agreeing to temporarily reduce tariffs. Investors now digesting today's CPI report showing inflation cooling in April. Joining me now, we've got Malcolm Dorson, who is the Global X Senior Portfolio Manager and Head of Emerging Markets Strategy. Great to have you here with us. So how are you looking at the state of markets right now? Coming off the rally, we've now seen the S&P 500 essentially get back into territory and perhaps on pace to erase some of the losses that we've seen over the course of this year.
Well, thanks for having me, Brad. Big picture, I think investors are incredibly underallocated within emerging markets. We see the average retail investor has roughly 3 to 5% exposure to the asset class. And if you look at what the benchmark says, you should have about 10.5%. And emerging markets make up 25% of global market cap. So people are dramatically underinvested coming out of a period of really significant US outperformance. And now that we've reached this period of sort of uncertainty, the main questions we're getting at our Global X Portfolio Consulting Group is people are looking for a second set of eyes saying, how do I find diversification? And we think emerging markets is a key area.
And so where within emerging markets are there specific regions that you're looking at?
For sure, because historically people used to be happy buying the index in emerging markets.
Right.
But now if you take a look at it, it's over 80% Asia, about 37% China, 26% state-owned enterprises. There are a lot of areas within EM that people don't want to touch, justifiably, but there are also pockets that present a ton of opportunity. So right now, we're most excited about, depending on what perspective you want to look at it, but from a long-term structural opportunity, India is a compounding machine. Our fund, NDIA, has been getting a ton of attention. From a value perspective, that I know a lot of investors, not only want to preserve wealth, but they see that as the best way to grow wealth, getting in at cheap prices. Greece trades below book value with a 7% dividend yield, and it's now an investment-grade sovereign with some of the fastest growth in Western Europe. And then in addition to that, we kind of take a look at a contrarian opportunity in Brazil. Yeah. Brazil just hiked interest rates to 14.75%. It's a powerful carry trade. We think that that is now going to contain inflation. By the end of the year, rates should start coming down. And historically speaking, in Brazilian rate cutting cycles, the average rally has been 96% versus the average drawdown being 17%. So we really like that risk-reward setup.
What is the checklist for emerging markets amid geopolitical tensions and a lot of the trade talk that still need to be netted out and formulated into deals that we're all awaiting some of the details around? Sure.
So starting out with trade, we think that coming out of the election and his first few months as presidency, Trump's all about the deal, the art of the deal, and the way that he approaches things is through sort of an anchor-based negotiation tactic, where he really likes to weight to one side or anchor things to one side, starting out with sort of a worst-case scenario. And that created a lot of volatility in EM, but it also created windows of opportunity. So whether it was China, Colombia, Mexico, investors who paid attention to this got in quickly and have been able to benefit from the upside. So now we're trying to scan this universe and see who's aligned with Trump's policies and where are we going to see a deal next. So we have this 90-day reprieve with China, fantastic, but India is going to be a very interesting opportunity, and we've seen really strong negotiation outcomes coming out of that, with J.D. Vance visiting New Delhi a couple of weeks ago. We think Argentina, with President Milei, is very aligned with Trump, that we should see some news coming out from the southern hemisphere as well.
When you boil it down to, and even refine further to a sector-based approach within specific markets that you would like to invest in, how do you identify which sectors are best positioned to be a core or pillar of some of the trade deals that we're still waiting to come through here?
So it's a good question because there are two different ways to approach this. From a sector perspective, looking at the deals and kind of from a more tactical opportunity, you'd probably be looking at areas where these countries manufacture and export, whether it be electronics in Northern Asia, whether it be commodities in Latin America or in the Middle East or in parts of Africa, or whether it be pharmaceuticals coming out of India. But that is more tactical. I think longer term, when you're approaching emerging markets, you kind of want to differentiate old economy versus new economy. And EM historically has been kind of making something or digging something and taking advantage of cheap labor. And these are asset-heavy, low-return business models. But looking forward, these companies have evolved. They have really strong private management teams now, and you have a lot of opportunities more in consumption, in the services sector, which are offer higher levels of profitability, higher growth, and overall better corporate governance. So long term, that's where we like the compounding opportunity.
Just lastly, while we have you, we know that there, of course, is the meetings that are taking place in the Middle East right now. The president's starting his international travels, and a few of the CEOs also tagging along, trying to be not just flies on the wall, but perhaps critical voices in these conversations. What should you be watching for, even as the president is going through these international visits, and where this could net out in some investment opportunities?
Yeah, looking for deal headlines. So the Middle East is very interesting because it seems like Saudi Arabia in particular is really playing ball. Near term, I think that might create a headwind for Saudi's market, but they're long-term thinkers. You know, it's Vision 2030 and beyond. So yes, near term, we're seeing a weaker dollar. Saudi Arabia's currency is pegged to the dollar, so that could be a negative for Saudi and other Middle Eastern countries as well. And same in terms of lower oil prices. But longer term, having a strong relationship with the U.S. is going to open a lot of doors for them, and I think it should be a net positive. So near term, what we look for is saying, okay, this arrangement's being made with the Middle East. Energy prices are coming down. We're seeing some sort of volatility. People are looking at gold a lot these days. Who benefits from that? And that's where I kind of come back to India again. India imports 80% of their net energy needs, so low oil prices really help. Average household savings in India is made up 20% of gold, so consumer confidence is booming. They're now starting to cut interest rates because inflation's come down, and it sets a really nice picture for them.
Interesting. Malcolm, thanks so much for taking the time in studio with us.
Thanks for having me, Brad. Absolutely. Appreciate it.